One of my favorite investment quotes comes from the legendary investor Howard Marks. He once said, "It's not what you buy, but what you pay for it." It is crazy that so few investors try to figure out the true value of the assets they own. Next time you're having a conversation about stocks, ask the investor if they know what the business is worth. If they don't have an answer, they are just speculating that the stock will go up. But if you significantly overpay for shares in a company, it is the same as buying a bad business. Your returns will either be mediocre or non-existent. That is why valuing a business is one of the most important aspects of my investment strategy. The three most important words to Warren Buffett are margin of safety. But you can't find a margin of safety if you don't know what the company is worth. To figure out a stock's value, I ignore the stock price entirely and focus on market cap instead. This gets you thinking like a business owner because now you have to figure out what the entire company is worth. I then use a more complex investment tool called a discount cash flow model to project the future cash flows of the company. It is these future cash flows that ultimately determine what a business is worth. I then compare this to the company's market cap to determine whether it is over or undervalued. The goal of any investor is to buy low and sell high, so that means you want to find stocks that are trading for cheap and avoid stocks that are overpriced. Here's a few examples. Nvidia has a market cap of $2.8 trillion. I think the company is worth $928 billion. Therefore, I should probably wait to invest because the stock is likely to continue falling. Here's another one. Tesla has fallen 26% in 2025 and now trades at a market cap of $960 billion. I think that the company is worth closer to $280 billion. Once again, I should probably pass on the stock for now. On the other hand, a good example of a cheap company is Euroseas. It has a market cap of $247 million. I think a more accurate value is $746 million. This mispricing of the business as well as the quality of the company led me to make an investment. Now, you don't have to be 100% accurate. The goal is simply to gain a general idea of what the business is worth. This will protect you from overpaying for stocks while also allowing you to find undervalued investment opportunities. So next time you plan to invest in a stock, remember Howard's words. It's not what you buy, it's how much you pay for it.